Hello and welcome to Donatien Investment. This analysis is for Canadian copper on the Canadian Securities Exchange as of 6th of July 2026 with a share price of 0 Canadian dollars 60. The full report is on donatien.ca. Canadian copper has materially de-risked an up to 96 million Canadian dollars financing package and a court-approved permitted brownfield plant on a PA showing a 171 million Canadian dollars net present value and a 36% return, price below 1 times net asset value. But copper is flat, and the environmental permit that unlocks the construction draws is still pending, so it is a hold short term. The medium and long-term signals are buy. The story changed since our last look. Canadian copper lined up an up to $96 million financing package in April, and in late June won court approval to buy the permitted, recently operated Caribou process plant near Bathurst. That brownfield plant is the whole thesis. It avoids the biggest cost and permitting hurdle a new mill would face. On top of that sits a preliminary economic study showing a $171 million net present value, a 36% return and a 2-year payback. At a $115 million market value against $171 million net present value, the shares trade below 1 times net asset value, genuinely cheap for a finance developer. The catch, and the reason it is a hold rather than a buy today, is that the construction draws are conditional on the New Brunswick environmental permit, which is not yet granted. Copper is also flat and the deposit is really a polymetallic mix, so silver and zinc matter as much as copper. This remains a pre-construction developer, so execution and permitting are the swing risks. The financing stack, a precious metal stream plus debt at a high spread, leaks value the headline study does not capture, and further dilution is likely. It is copper in name, but the value is spread across zinc, silver and lead, so a base metal sell-off hits it directly. None of that breaks the thesis. It is why the near-term call is a hold and any position is best scaled in. Now, the other side of the ledger. EIA permit denied or stalled. Financing draws lapse. Copper below approximately $3.20 a pound or a zinc chike silver sell-off. Dilution to bridge funding on poor terms. Microcap, no institutional coverage. Now weigh the risk against the reward. The bull case is roughly 75% above today, the base case, the most likely, about 42%, and the bear case a fall of about 30%. So you are risking about 30 to make 75. So, our call on Canadian copper on the Canadian Securities Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.